Welcome to Investing Path, the channel that delves deep into the world of economics and financial predictions. In this episode, we bring you the insights of Simon Hunt, a renowned British economist currently based in Dubai. With extensive experience conducting business in China, Africa, Australia, Chile, England, and other major nations, Hunt possesses a unique vantage point on the global economy. According to Hunt, the late 2024 to early 2025 timeframe is critical, as it coincides with a potential blow-off in long-term 10-year US Treasuries. Simultaneously, he anticipates internal market challenges arising, compounded by an intensifying war scenario. These factors could ultimately lead us into what he believes will be a depression reminiscent of the one experienced in 1929. Simon Hunt outlines a series of steps that he believes will lead to a depression in 2025. According to his analysis, the initial catalyst is the presence of war, which extends beyond just the conflict between Russia and Ukraine. Various major countries are involved, supporting different nations and influencing geopolitical dynamics. While the connection between war and the economy may not be immediately apparent, Hunt suggests that central banks, particularly the Federal Reserve, will need to reassess their policies in light of this global turmoil. Currently, the Fed is implementing a policy known as quantitative tightening, which involves reducing the money supply. However, Hunt predicts that due to both the war and potential financial market mishaps, such as bank failures or a stock market crash, the Fed will shift its approach. The resulting justification for this shift will be the trigger to transition back to quantitative easing, wherein money is injected into the system instead of being withdrawn. Hunt expects this policy shift to occur by the end of this year, effectively halting the tightening measures. The shift to QE will have subsequent effects on the market. Hunt anticipates a temporary correction in the financial markets, followed by a resurgence in stock prices leading up to 2025. With the Fed implementing QE, there will be an influx of liquidity into the market, driving stock prices higher. In fact, Hunt suggests that stocks and commodities will reach new highs during this period due to increased liquidity. However, after the stock market peaks at around 6,000 points, Hunt predicts that the depression will strike, causing significant damage not only to the economy, but also to the stock market as a whole. When asked about the nature of this downturn, Hunt suggests that it will be a crash rather than a gradual decline. The subsequent recovery over the following 2 years should be utilized as a means of safeguarding oneself during the impending depression. Simon Hunt's predictions regarding the stock market present a compelling arc. He anticipates a downturn as the economy enters a recession, followed by a significant surge up to 6,000 points once the Fed initiates quantitative easing. However, this upward trend will be short-lived as the market crashes when the economy plunges into the next Great Depression. Nevertheless, timing the market can be risky, and it's important to consider one's own investment approach. So, Hunt provides insights into the future of US dollar. He believes that in the short term, the currency will experience fluctuations, but in the long term, it will progressively depreciate. This depreciation is attributed to the continual devaluation of the dollar through money printing. Hunt highlights that investors seek value and are unlikely to favor a currency that consistently loses its worth over time. He suggests that the rise in the inflation witnessed since 2020 is only the beginning, with a more significant wave of inflation on the horizon. In fact, he predicts that by 2025, the US Consumer Price Index will surpass the peak of 13.5% observed in 1980. The inflation levels he foresees would resemble those experienced in the 1970s and early 1980s, with a destructive wave looming on the horizon. Hunt points out that the events now unfold at a faster pace, indicating that the impact may be felt sooner than in previous cycles. As a result, US Treasuries are expected to experience a blow-off by mid-2024, reaching around 11%, which will have a detrimental effect on the financial markets. Combined with the escalating war scenario, this will contribute to the onset of the next Great Depression. Hunt's projections extend to the collapse of the global financial system, mirroring the drastic decline witnessed during the 1929 to 1932 period. Consequently, prices of commodities, including copper and metals, will also plummet. Looking ahead, he envisions a world where multinational guarantees and equity, rather than debt, drive growth. In addition to his depression prediction, Hans references the Gleisberg cycle and the Dust Bowl decade, providing further context to his analysis. As we assess these predictions, it is crucial to keep in mind the potential implications they hold for investment strategies, global economic trends, and the local term stability of financial systems. Simon Hunt's analysis delves into the potential impact of the Gleisberg cycle, which is set to occur around 2025. Drawing parallels with the Dust Bowl decade in the 1930s, Hunt highlights the historical correlation between the Gleisberg cycle and significant events such as the Dust Bowl. While not an expert in meteorology, Hunt acknowledges the potential implications if the Gleisberg cycle aligns with his predictions. The cycle typically affects the US Midwest, a crucial region for agricultural production. This aligns with Hunt's forecast of soaring food prices in the coming years. Moreover, factors such as the European drought and the projected 90-year drought cycle in the US Midwest by 2024 contributed to the potential surge in the food inflation. Hunt's analysis suggests that these circumstances, combined with other elements of his predictions, paint a picture of a tumultuous period reminiscent of the Great Depression. If his projections hold true, we can anticipate inflation levels surpassing the 1980 peak of over 13.5%, US Treasuries reaching more than 11%, a brief stock market crash followed by a bullish phase up to 6,000 points, and ultimately a significant crash coinciding with the onset of the Depression in 2025. While Hunt's prediction may appear extreme, it is essential to critically evaluate the assumptions he makes. Will the Federal Reserve indeed pivot its monetary policy as he suggests? Will inflation reach levels higher than those observed in 1980? Can the Gleisberg cycle be relied upon to occur and impact the predicted timeframe? These are vital questions that should be considered when analyzing the likelihood of Hunt's forecast. It is worth noting that Simon Hunt's unique position, residing in Dubai and having extensive experience conducting business in major trading countries, grants him valuable insights into global trade and geopolitical factors such as the ongoing war. These insights contribute to his qualifications as an analyst, providing a broader context for his predictions. Furthermore, while there are elements of uncertainty and speculation in Simon Hunt's forecasts, it is crucial for individuals to develop their own investment strategies that can withstand various market conditions. Each investor should carefully consider their risk tolerance, research different perspectives, and make informed decisions based on their own financial goals. The full interview with Simon Hunt can provide a more comprehensive understanding of his analysis, and it is advisable to explore multiple viewpoints to form a well-rounded perspective. Thank you for joining us on this insightful exploration of Simon Hunt's predictions and analyses. The future of the global economy and financial markets is a topic of great importance and interest. As we discuss the potential scenarios outlined by Hunt, it is essential to consider the various factors at play and form your own perspective. Now, we want to hear from you. Do you believe Hunt's predictions hold merit? Are you preparing for the potential market shifts and economic challenges he foresees? Share your thoughts in the comments below. Remember, navigating the financial landscape requires a well-defined strategy. Whether you align with Hunt's predictions or not, it is crucial to have a plan that accounts for different market conditions. Stay informed, research extensively, and make decisions that align with your financial goals. If you found this video informative and thought-provoking, make sure to subscribe to Investing Path for more insightful content on investing. Don't miss out on future updates and perspectives that can help shape your investment decisions. Thank you for watching, and remember to chart your own investing path.